All right, good morning or good evening. Welcome everyone to the Trading Pub. Usually we have our host Morgan Busby with us, but he is actually traveling a bit today, so will not be joining us. We're going to have a couple presenters come in and speak to you about items of interest in the market. Our first presenter today is going to be Tony Peterson, and Tony is going to be talking to you about using Confluence to create high probability trade setups. Now, I want to take a few seconds, walk you through a couple of basic, I don't want to say rules, let's say guidelines. We do ask that you guys give the presenters as they're speaking your attention and also your courtesy. If you have questions at the end of the presentations, after the traders have gone through their slideshows and given you the information they want to put out there, we're going to get them to hang around and answer those questions. We do expect some measure of courtesy in the room, obviously. Let's see, Tom, I can't really tell you what you should do about not hearing me if you can't hear me. So if you guys are listening in, if you're having problems hearing, you always want to try and log out, log back in. That's a good way to fix that. Yeah, I can actually see when my microphone's moving across. But I'm glad that everybody was able to join us this morning. And let's see. Tony, I'm thinking we probably just go ahead and get straight to your presentation, or are you queued up and ready to go?
I am indeed ready to
All right,
go.
well, ladies and gentlemen,
Everybody's
this is Tony Peterson. He'll be your presenter for the next half hour to 45 minutes.
welcome, and thank you, Chuck. Thanks everybody for coming out during your lunch. I hope everybody's having a night. Well, I'm on Eastern time, so it's lunchtime here. I know a lot of you are from all over the world, but if you're trading the New York hours, then hey Heinz, then it's lunchtime, and so hopefully this will be a nice diversion for you during lunch. Today we're going to talk about confluence, and I'll go into confluence and how important it is to trading and the trading that we do at the Intentional Trader. And perhaps it's not something that you've considered adding to your trading, and maybe you should to see if it can help you be a bit more successful. First of all, let's go over a little bit about me, so you know who you're listening to, and why I might have something interesting for you to hear. I actually was a remodeling contractor for over 20 years. I owned a couple of hot tub stores. Did very well at that, but just got completely burned out of it and decided I wanted to do something that was going to be a lot easier than being a contractor. So I decided I was going to start trading. Within about 6 months, I figured I'd be able to replace the income that it took me over 20 years to achieve as a contractor. But figured, I'm pretty smart. I can pick this up, and I'll quit being a contractor and take the easy life of a trader. And so I figured after 6 months, well, this might take a little longer. Little did I know what a little longer meant. So for 7 years, I struggled and failed and struggled and failed, and ultimately was ready to just throw in the towel. And then something big happened. Now, when we get to the end of this, I know we have some extra time today. So if you have questions about the something big that happened, I think we'll have some time to answer that. I'm not going to answer questions as we go along, but if you hold your questions I'm happy to talk to you about what we talk about here in the presentation today, and if you've got some more questions for me about trading in general, I'll be happy to answer them for you. I have become a full-time trader. I've been doing that for up until recently. I've been saying 6 years for so long that I had to rethink it, and it's been a little over 7 years now that I've been trading for a living. Ultimately, I became a trading educator. Now, I did not intend to do that. I was trading with a group of friends via Skype that we had met in different trade rooms around, and we kind of became friends and ended up sharing screens via Skype. They noticed that my trading went from horrible to actually compelling them to ask me what I had changed, why was I trading different and better, and why were the calls I was telling them working out so well. I became an educator by happenstance, and then I started developing systems and indicators to help with the education part. And you know, the whole thing just kind of grew, and I still find it bizarre to this day that after having struggled for so long, that I'm actually somebody in a position to help other people at this point, because I managed to change my perspective on trading just a little bit, which totally changed how I approached it. All right, if you want to hear more about all of this, we're going to offer you a special. If you guys want to come and hang out with us in our trading room for a week, in fact, this link right here on the screen is, let me see if I can go. Can you see that arrow? This link is actually live right here on this screen. If it doesn't work, you could click that and register for a free week, or you can, Lisa put it down here in the chat. You can click it there. If you can't do the free week immediately, let Lisa know. Lisa is my associate, and she'll take care of you and make sure you get a free week scheduled. So you can go ahead and fill that out, and if you want to hang out and see what we're all about. We also have some training this weekend going on where we're kind of doing a workshop with what we do. And so, again, this is a live link right here. If you want to sign up for the workshop, feel free to sign up and come hang out with us this Saturday. It's at 11 a.m. Eastern Time. And I do a lot of question and answer during those also. So I can do a lot more than what we're going to talk about here today. I may generate some questions in your mind today. Oh, what? Where does it say 3/9? Oh well. Yeah, we may have changed the date. It's this Saturday, the 16th. All right, so let's talk about confluence. First of all, let's use the Investopedia definition of confluence. Confluence is a combination of multiple strategies and ideas into a complete strategy. It occurs when two or more separate ideas or strategies are used together to form a trading strategy that is in line with the trader's risk profile and goals. It can also be used when doing technical analysis by looking at charts and developing, this is the important part, levels where different indicators are combined to identify possible opportunities. Okay, that's important. So let's talk about this. We talk about different indicators. What are the best indicators to use for determining confluence in your trading? Now, the best indicators you're going to want to use are the ones that give you the most information about your competition's next move. Now, if you're trading, don't ever think that you're not competing, because that's exactly what you're doing, is you're competing with somebody who has an opposite opinion of what you have about what's about to happen in the market. All right? So the best indicators are the ones that give you the most information about what your competition's next move is likely to be and has the least amount of effort to read and understand what that indicator is telling you. This is very important. And you'll see this as we go on. I may show you some things that look very familiar to you. Now, if you sign up for the weekend event this Saturday, it may say March 9th, but it was intended to be the 16th. If you get an email back that says the 9th, or it says that on the link, ignore that. It's actually the 16th, and I apologize. It's not over. It just apparently the link didn't get updated. Okay, so let's look at some indicators here to try to show you to illustrate the point that I was trying to make about easy to read indicators. Okay, and using them with confluence to determine what your competition is likely to do next. So let's look at each of these indicators that somebody might give you when you're talking to them or they're in front of you, and you might see these indicators. And in and of themselves, these indicators may or may not give you the complete picture of what this person's intentions might be. Okay, so using a grimace as an indicator of what this person might do next, or what their intentions are, or maybe somebody wearing a mask, or has their shoulders hunched up a little bit, or maybe they've got a fist. They're making a fist. Do you get, just by looking at these one individual things, do you get the sense of what these people are likely to do next? Not necessarily. Now, if we combine these indicators and we have a confluence of indicators suggesting all the same thing, then the intentions become much more obvious of what your competition is likely to do next, right? You start combining these indicators, and suddenly the intentions become very clear and obvious. So let's use trading as an example. On these charts, these charts may look very similar to something you're trying to use, maybe very familiar. Now, these each one of these charts may or may not have areas of confluence on them, suggesting that you might have a potential trade entry. So let's just say, yeah, each of these charts suggest a good point of entry on a trade. So let's say we have confluence. But initially, when you look at them, are these signals? Is this confluence easy to see and read? The intentions of what your competition is likely to do next? Not so much. Not very easy to read at all. You need to be able to, at a glance, know exactly what your competition is likely to do next. All right. If it takes too much study, you're going to lose a good piece of the picture. So let's take one of these charts. Okay. Let's just take this one and say, okay, this looks probably very similar, very familiar to something that you may try to use. So the chart on the left has a bunch of indicators that have come to a point of confluence to suggest a trade entry. But is this easy to see? Or is this easier to see? Okay? So again, not just the confluence of indicators, but an easy to see and read confluence of indicators to understand what's likely to happen next at a glance. Okay? Now, if you're paying very close attention, and you might have a hard time seeing this, this chart right here, this chart is this one. This is the same chart. This information that I need for entering a trade right here, this is the setup. is all right here. It's all in all of this confluence here. Oh, you don't have a pointer. I thought I selected the pointer. Let's see. How about that? Can you see a red dot? Can you see the dot now? Okay, I'm sorry. I thought I had a pointer on there. I could see it, but I guess you guys couldn't. I apologize. All right, let's go back. Right here. See all this confluence? We've got all of these indicators suggesting this pullback here. Now, my point is these are easy to read. These are not. These require an awful lot of time, effort, and energy to look away from your target, away from what you're doing. Now, this chart is the same as this chart. These are the same charts. This here is this chart here. So what we've done is we remove the superfluous information and just add in what we need for confluence that's easy to read. Okay? That's very important. If it's not easy, it's going to take you too much time to try to make a trade decision. And you're likely to get conflicting information that might make you hesitate or make you unsure about what you need to do. Okay? So confluence is very important, but it's got to be easy to see and read. Now, confluence in and of itself is not necessarily just a good thing. If you're gathering information and using essentially the same source of data, but maybe using different indicators for that source of data, for example, using maybe price, and you use 5 different indicators based on price, do you have truly confluence, or are you just looking at the same data maybe a few different ways? The important thing is to make sure that you have non-correlated indicators to determine your confluence, meaning the data that you're using to generate a signal come from completely different sources of information, yet they all agree with each other. Okay, so there's non-correlated confluence. Let's talk about that for a second. Remember, non-correlated. Data for each indicator is collected from a different source, and each of these sources are unrelated to each other. For example, maybe we use price or volume or order flow or momentum or support and resistance. Okay? There may be some slight overlap in some of these, but each of these indicators or sources of information, if you can create an indicator or find an indicator or use an indicator that is very easy to see and read when certain conditions exist, and you can see and read them all at the same time, and they all agree with each other and suggest that your competition is likely to do something next. You know, that based on all of these indicators, your competition is probably going to react a certain way. Then you've got confluence, and when you've got confluence, you've got a high probability setup to enter a trade. Okay? Doesn't mean it's always going to win. Of course not. The markets are going to do what they're going to do. But you've got a high probability setup when all of these indicators, all of these different sources of data are in agreement with each other. Let's make another illustration here. If my other example didn't work. Let's say you're on a jury. Okay? Now, your job on the jury, you have absolutely no opinion. Look at their faces. They've got like nothing in their heads, right? They've got no opinions. They've got no emotions on their faces. They've got nothing to go on or make a decision on except the information that they're given by the lawyers. Okay? Now, if you were on this particular jury, whose testimony might have the most influence over your decision on this jury? Let's say the prosecution gets up and says, I've got an expert witness. Let's put this expert witness on the stand, and let's get the testimony of this expert witness. Now, you're on the jury and you have no other information to go on. So this expert witness stands up and gives his testimony and says, you know what, this is why I believe that this guy is guilty. And so now as a jury, you're probably swayed by this expert witness's testimony because he's an expert in some particular field that applies to this trial. Now let's say the expert witness sits down and it's now the defense's turn, and the defense brings up multiple expert witnesses, but they're not all from the same field of expertise. Each of these expert witnesses are from totally different fields of expertise, yet they all pertain to this particular trial. Okay, so let's say these guys are in total agreement with each other, yet they're all coming from different fields. Now, on the jury, who are you going to have the most faith and confidence in making a good decision? You know, and this is an important decision. And when you're trading, every trade you make is an important decision. So whose testimony is going to bear the most weight with you and give you the highest level of comfort and confidence that you're making a good decision? Absolutely. All right. So now we've talked about confluence of indicators. We've talked about, but not confirmed, the easy to see and read. So let's look at the easy to see and read. Let's look at now two different ways to look at the same thing. A very common indicator is an RSI, or relative strength index, which is this oscillator down here at the bottom of the screen. A lot of people use it for different things. We're going to use it in this example to determine when price is overbought or oversold. Now, we know when price gets overbought or oversold, there's a tendency for traders to want to pull it back out of that condition. Okay? So that's why we would want to know when something is overbought or oversold. Now, all of this information that we need to know when it's overbought or oversold is only in three little spots here on this oscillator. Now, all of this other information is absolutely worthless. Okay, so we really don't need to use all that information. So what we're going to do is we're just going to get rid of it. Now we're going to put that information right where we need it, right where we're making decisions. I'm actually, there was another presenter scheduled after me, and I believe they're not going to be able to make it, so this gives us a little bit of extra time to go over some of these things. So I'm not rushing to get through. We've got just a few extra minutes here, so I want to make sure I cover some of this as completely as possible. We've got the indicators are showing up where we're overbought and oversold, and now we can get rid of this oscillator down at the bottom of the screen that's distracting us from paying attention to what's going on right in front of us. Okay, we call this a heads-up display indicator. This is what we use to help us keep our eyes on the target so we don't get distracted. And everything is very clean and neat and easy to see. Remember, confluence has got to be easy to see. If you're looking for confluence and you keep adding more and more and more indicators to determine confluence, it ends up becoming a convoluted mess. And I think many of you may know and understand exactly what I'm talking about. You may have a lot of really interesting things on your charts that each and of themselves that have a lot of value, but combined makes trading just that much more difficult and confusing. Okay, let's use another example here. We're going to go back to the RSI, but let's say we're trying to pick up divergence using an RSI. Now, some of you may use divergence on a daily basis, and you can look at this chart and this oscillator and pick up divergence quickly. Now, divergence is an extremely powerful indicator that is underused quite a bit. But this using divergence is often very difficult. So what you need to do is, again, this might be a typical, if you have a divergence indicator. Yes, you still have a potential indicator. These actually draw backwards. You don't know you have the divergence until you draw backwards using one of these types of indicators. But what you want to do is you want to get rid of as much information as you can and put the information right on your chart, okay? Right where it's easy to use. Now let's use this confluence to determine where we think price may be wanting to pull back, where we can take advantage of what our competition's next move might be, right? So we want to predict a pullback using confluence, all different sources of information, all right? So let's look at where these are pulling back. Now let's start adding in some indicators that where we might suggest where those pullbacks might happen, okay? So you'll notice we have a confluent, it doesn't pick up all of them, but we have confluences of indicators suggesting these pullbacks that'll happen. Okay, so this is how we use confluence. So do we have confluence? Yeah. Are they easy to see and read? Absolutely. Okay? That's what I'm talking about when I say using confluence to make trade decisions and making sure that confluence is not something that confuses you. It's got to be something clear, neat, concise, and easy to read. All right? I just want to remind you about our weekend. If some of you came in late, I know that, and we have a free week. We normally charge $49 for this, but we're going to offer it for free to any of you that want to come hang out with us for a week and see how we use confluence to trade. You can either click on this link here, that should be live, or Lisa put it in the chat down there. And if you want to come and learn a bit more about what we do, we are having an event this weekend. Apparently, the link to this sign up says the 9th. That's a mistake. It will go ahead and sign up. The sign up still goes to the same place. If it says that it's March 9th, please ignore that. It's actually the 16th, which is this Saturday at 11 a.m. Eastern Time. And we'll talk more about what we do at the Intentional Trader and how we use confluence for our trading. Now, I do have a little bit of time left, and I'll be happy to answer a few questions. You can either talk about, you can ask me about confluence, or and I'll do my best to answer as many questions as I can. If I get too many and they start scrolling off, just know that you can come on Saturday and ask questions also. So how high is the probability of a particular confluence signal? Do I have records? Yes. You can look at my trade log online at theintentionaltrader.com and just go to my personal trade log. I make a living trading. That's my first job every day. I have basically, I set it up as two different businesses. My trading is a business. The Intentional Trader is a separate business. So I do trade for a living, and my trade log is online. you Lynn, you're too nice. Teo, the big thing that happened to me, I was a failing trader, completely failing. And I had decided to quit. I had been doing it for 7 years. I had decided I was just not going to do it anymore. And I was decided I was going to just basically I had a little money left in my trading account. So I thought, well, rather than just stop trading and take that little bit of money out, I thought, you know what, I'm just going to gamble it away because that way when they shut my account down, I'm done. I'm stuck. There's nothing else I can do. So that was my plan. But then the last minute I decided, I had this idea about trying to approach trading from a different way. Now I didn't do it before because I was still trying to learn how to trade and trying to figure out how to do it. But I was at a point where I was ready to give up. Now I was pretty sure that this experiment that I wanted to try was going to fail, and that's why I didn't do it in the past. But I was at a point of total failure and quitting and ready to be moving on in life, and so I decided, well, let me try this, and I decided I was going to treat trading like a business and quit trying to learn how to trade. I was going to stop learning how to trade, and I was just going to be a trader, and I was going to start a trading business. Now, if any of you have ever run a small business, and some of the simple questions Lisa can answer, that are going through about what we trade and entries and exits and stuff like that, Lisa can answer some of those just in the chat there. So I decided that I was going to approach it like a business, not like somebody constantly trying to learn how to trade. Well, as a contractor, my job as a contractor was problem solving. So rather than trying to learn externally how to trade from everything I was reading, watching, learning, buying, whatever, that wasn't working for me, I decided to approach it as a business, and I wiped the slate clean. I decided I was going to start with essentially that image that I showed you a few minutes ago. I was going to start here, and I wanted to look at something like this and say, okay, I can see on this chart that price stops and turns. Now, how could I take advantage of when I could hope to see price stop and turn like that? And if I could pick that up predictably and reliably, would I have a decent edge? So that's where I started. And so I started thinking of this rather than looking externally for all this information. I took what little bit I did know and tried to apply this as a new type of problem I had to solve, as if there was no other information out there to be had. Well, support and resistance was one of the first things I learned about trading, and so the fact that it's kind of a foregone conclusion, it's a self-fulfilling prophecy about price bouncing off of or reacting to support and resistance. I built this idea around support and resistance. So price will predictably react to support and resistance. So that's where it started. And I started building from there. Now I could go into this a whole lot more and a whole lot longer, but I also started treating this like a business. And as the lead trader, see, I decided money makes me stupid. And I can't allow money to creep into my job as a trader. My job is to win more trades than I lose and manage those trades to their logical conclusion based on my trade plan. That was my job. I had never approached it that way before. So I decided that was it. I was going to approach it that way. I was going to do my job. Now, that kind of changed the way I thought about trading. I decided, you know what, in business on a daily basis, yes, as a business owner, you have to keep costs in mind, and you do have to watch the dollars. But during your day, you have a business to run that requires all of your effort, and you let the bookkeepers and accountants handle the money. So I decided, you know what, I'm going to let the bookkeepers and accountants handle my trading money at the end of the day. During trading, I don't worry about that. I trade. I focus on trading, and I could be trading for widgets or whatever. Okay? So anyway, that's the very, very short version of this story. It does get much longer. But I did this whole experiment, and it went on and on and on, and it actually started working, and my trading started turning around, and people started asking me what I did and how I did it, and could they do it, and that's what started the whole thing. All right. I saw a lot of questions scroll by, and I could certainly expand on that a good bit more. If you would like to ask me more about that on Saturday, I'll have a lot more time. I don't want to drag this out too long. I don't trade binary options. They were going to speak of binary options during this 30 minutes, but apparently the presenter couldn't make it. Why? Why don't I trade binary options? Because I trade futures, and I trade a different system. That's why. It all, Teo, it kind of it all kind of happened at the same time, because I actually took the time to ask myself, what the heck is wrong with me? What are the things that are causing me to not move ahead? Methodology and the psychology, really, it all happened at the same time. I had to work on them at the same time because I was at a point where I just couldn't, I was beating my head on the wall. So for me, it happened at the same time. I don't trade Forex. Many of our traders do. I don't personally. Great, Keith. I don't know anything about binary options. I can't even speak to it. Okay, if we don't have any more questions, I think Lisa may have answered many of your questions. Both, Chris. I can teach you how to read the indicators, and we have videos. We have indicators that you can purchase from us that do what we do, that you could trade what we do. A lot of people like to use our indicators because, like I said, they're called the heads-up display indicators, and they adapt them to their own trading system or style. So you don't have to. We don't just have a system that we sell. Each one of our indicators are very good and easy to use and can be applied to other types of trading and trading systems. Yeah, it makes things so much easier. And it removes a lot of the doubt in your mind about what the indicator is saying, Chris. When you have it right there in front of you, it's like a light switch. It's on or off. It's yes or no. The condition exists or it doesn't exist. Great, Teo. We'd love to have you. All right, folks. Well, I really appreciate your coming. I've enjoyed it today. I'm looking forward to meeting all of you Saturday. If you can't make it, please register. And we do video and make the video available. If you cannot attend, please make sure you register. But we do encourage you to attend and get involved in the conversation and ask questions and such. So it was a pleasure meeting you all today. I want to thank the guys at TradingPub and appreciate the opportunity and look forward to meeting you. Thank you.